So real quick, what are the corporate entities? We'll do a quick overview. The one you've probably heard of the most is an LLC, limited liability company. These are the ones that I typically recommend for creator clients because they're the simplest. They basically allow you on the taxation side to treat your income as pass-through or elect it to be treated as a C corporation. What that basically means is if you elect for the income and the losses of an LLC to be a pass-through, where all of the money or the losses that the LLC had will go to your personal income. And you can then use those losses or income, as it were, to offset other ventures that you have that are completely unrelated to the LLC. Not only that, you avoid double taxation. So the way the US tax code works for corporations is that if a C corporation makes money, makes $100, the C corporation is taxed. I think at most right now it's like 15% or 20%. Trump's tax code or his tax cuts lowered it. So let's say it's 20%. Then when that C corporation gives money to the person who owns it or the employees, that person is taxed again at the regular personal income rates, whatever that is for you, depending on your tax bracket. 2 layers of taxation. That's just how it works. But when you have an LLC, you can avoid that first layer of taxation completely. And you just take the income right down to the creator or the individual that owns the LLC, and it's just treated as personal income. You avoid the corporate tax layer entirely. So because of its flexibility and simplicity, I recommend LLCs most often. C corporations, they're just more complex, and they're more traditionally the case if you want to create like a startup company that goes and chases venture capital funding. That's when I'd recommend doing something like a C corporation. Touch briefly on partnerships. They're really not for creators. Typically, partnerships or LLPs are for specialized areas of service providers like legal, like myself, or accounting. And generally, they operate very similar to an LLC in terms of the taxation structure. And lastly, an S corporation. Now, you may have heard that you need to file as an S corporation. Well, here's a dirty little secret. There's actually no such thing as filing as an actual S corporation. An S corporation is a tax election that you make. So the first step for creating any corporate entity, you file the form, you get the LLC, you get the C corp. If you want to become an S corporation, then in addition to that, you have to file a form directly with the IRS saying, hey, I declare that I am now an S corporation. And there's requirements for what it is to be an S corporation. You have to have a certain number of shareholders, and you have to do it within a certain number of days after you file the entity. The basic thing you need to know is that an S corporation helps you on the taxation side. It's very similar to how an LLC operates in that you can avoid the double layer of taxation. For example, in my law firm, that's what I'm doing. Instead of just using my for creators by creators entity, because then I would get taxed on the corporate income, and then when I pay myself, I would get taxed again. I elected to be an S corporation, so now I'm only taxed when I receive the money, and the corporation is not taxed at the higher rate.